we'll continue our fiscal expansionary policy with those extra revenue that we receive, but more importantly to also cushion the impact to the vulnerable groups here in Malaysia.
Every single time, whenever our country's government announce any incentives for the public, or simply when you were admitted to a government hospital, you were surprised by the low fee that you had to pay. And you might wonder, where does our government earn all the funds to give out these incentives? The simple explanation will be the Malaysian government uses the funds that they receive from the revenue collected and use it for the public interest. Hence, what is actually revenue? Revenue, according to the Oxford Dictionary, is income. Specifically, government revenue refer to all of the government's income, including tax and non-tax. These revenues are utilized by the government for various purposes that are known as government expenditures. Government revenues consist of two main components, which are tax revenue and non-tax revenue. Tax revenue is obtained when individuals, corporations, partnerships and companies pay taxes on the income or property, which is collected depending on legislation passed by Parliament. Tax revenue accounted up to 58.3% of revenue collected in 2020, amounting to 153.26 billion ringgit Malaysia. The tax revenue can be further classified into two categories, which are direct and indirect tax. Examples of direct tax revenue are individual income tax, corporate income tax, petroleum income tax, and more. Sales and service tax are widely known as SST, excise duties, and import and export duties are examples of indirect tax revenue. Meanwhile, non-direct tax revenue are revenues such as investment income, licenses, permits, and many more, amounting to 74.01 billion ringgit Malaysia, which is about 22.3% of total revenue collected in 2020. Knowing that the government of Malaysia is able to generate revenues from various sources, governments will use the revenues generated for two main purposes, which are first, to finance the goods and services they provide to citizens and businesses, and next, to fulfill their redistributive role. The steady growth of Malaysia's revenue collection can be seen through the report from the Malaysian Economy in Figures 2020 up until the pandemic era. The impact of the breakout of COVID-19 virus has caused the government revenue collection to be severely affected. Thus, the revenue collection in 2020 has fallen from 264.4 billion ringgit Malaysia in 2019 to 244.5 billion ringgit Malaysia in 2020. Due to the fact that the virus has caused a high rate of hospitalization among people, it has pushed the Malaysian government to implement multiple movement control orders. Numerous restrictions were enforced, such as the closure of all premises except those that are categorized under essential services, closure of all educational institutions, restrictions for all tourists and foreign visitors to enter the country. Realizing the problem and the impact of COVID-19 breakout on the government revenue collection, there are a few major issues that caused the fall in revenue collection, which are first, lower crude oil prices internationally, next, economic slowdown due to the implementation of Movement Control Order (MCO), and lastly, the impacts of the economic stimulus package and recovery plan. First, lower crude oil prices internationally. The oil and gas industry is an important industry in Malaysia, as shown from the data that petroleum income tax, or known as PITA, is one of the main components of direct tax revenue. The fall in PITA, which fell by more than half with a percentage of 58.9% from 20.8 billion ringgit Malaysia in 2019 to 8.5 billion ringgit Malaysia in 2020, is a key contribution to lower tax collection. Lockdowns imposed on a global scale have helped demand for crude oil drop sharply in the first half of 2020, which led international crude oil prices to drop up to $40 per barrel. Not to forget, the travel restriction during Movement Control Order or MCO has resulted in a downsurge of demand for petroleum nationally. Worst thing to come as due to reduced petroleum royalty proceeds, license and permit receipts fell from 14.5 billion ringgit Malaysia in 2019 to 13.2 billion ringgit Malaysia in 2020. Followed by the drop in export volume has caused export duty collection to decrease and the absence of a special dividend for tax return, as well as 8.5 billion ringgit Malaysia and 4.2 billion ringgit Malaysia fall in pita and royalty respectively. Next, economic slowdown due to the implementation of MCO. The limitations in business operations have caused an economic slowdown. This can be justified by the decline in the gross domestic product or GDP of Malaysia in 2020 compared to the year 2019. The impact of economic slowdown has caused the collection of two main components of direct tax to decrease. The largest component of direct tax, which is company income tax, CITA, is down 6.8% to 59.4 billion ringgit Malaysia this year. This is primarily due to the decrease in corporate income as a result of slower economic growth and global movement limitations. Individual income tax as well fell in 2020 with a total of 35.91 billion ringgit Malaysia, approximately 7.2% from the previous year of 38.68 billion ringgit Malaysia. According to the Ministry of Finance, the main factors that affect the collection performance are higher retrenchment incidents, salary reductions and unpaid leave offers by employers to ensure the business continuation. As business operations were forced to be downsized to adhere to SOP, business owners had no choice but to downsize their workers as well, leading to high cases of retrenchment. Not only that, the indirect tax was also impacted by the implementation of Movement Control Order MCO. As such, excise taxes collection also decreased, with 10.5 billion ringgit Malaysia collect in 2019, up to 19.1% from 8.5 billion ringgit Malaysia in 2020 due to the suspension of operation of the majority of motor assembly plants. Apart from that, impact of economic stimulus package and recovery plan on revenue of the government. A lot of people and businesses lose their sources of income during the MCO have led the government to undertake multiple initiatives to keep the economy running, which include tax initiatives and exemptions. However, this has caused the tax collection for that particular year to fall, accounting to 180.57 billion in 2019 and only managed to collect 153.26 billion ringgit Malaysia in 2020, falling short from the previous year. The same goes for tax income, as had decreased as a result of tax initiatives included in the economic stimulus package to cushion the impact of the COVID-19 outbreak on the economy, such as deferment of tax payments for all tourism-related businesses until December 2020 and postponement of tax payments for small and medium enterprise SMEs from April to June 2020. In addition, other tax exemption measures proposed as part of the economic stimulus package, such as tourism and service tax on hotel accommodations, would lower sales tax and service tax, or SST, one of the components of the indirect tax, even further. Despite all the problems and issues before, the government had stepped in to play their role by developing and emerging the best suited initiatives to tackle these problems. The initiatives we will discuss are: first, comply with OPEC Plus agreement to stabilize price of crude oil; next, nationwide vaccination program; and lastly, Employees Provident Fund, or better known as EPF, withdrawals. Following the issue of international lower crude oil price, OPEC Plus, or better known as Organization of Petroleum Exporting Countries, and its allies have established the agreement of reducing the total production of crude oil on April 15, 2020. The objective of this agreement was to rebalance the crude oil market due to the Russia and Saudi Arabia oil price war issue and the severe limitations of movements and economic activity because of the global pandemic. Thus, as one of the members of this organization, Malaysia agreed in limiting the output by 136,000 barrels per day starting from May to July 2020. The OPEC Plus agreement showed its effectiveness when reportedly, since June 2020, large worldwide liquid fuels inventory withdrawal has occurred due to lower supply and will continue to decline in the second half of the year and throughout the most of 2020 as forecasted, then resulting in a relatively balanced market that leads to higher proceeds for government revenue, as the stabilizing will help to improve the overall industry's performance. In February 2021, to overcome the heat taken towards the implementation of MCO, the Prime Minister, Tan Sri Muhyiddin Yassin, launched the National COVID-19 Immunization Program. This program was carried out in 3 phases, which categorized the first group consisting of medical staff, essential workers and law enforcers, followed by the second group, which are elderly citizens, chronic illness patients and disabled people. Lastly, the third group, which are adults and 18 years old and above. The rising trends in the vaccination rate had led to more changeover of phases in the National Recovery Plan. This action had been proved as the most effective one in helping the economy to recover as nations' health are projected, allowing more businesses and in fact whole economy sectors were convinced to run as usual, resulting in the increase in government revenue. Last but not least, with the mission to boost the revenue of Malaysia in mind, the government had released an endorsement for all of the non-government workers, which is for them to make withdrawals through their savings in Employees Provident Funds or EPF. The Prime Minister had launched the programs called iSina, iLestari, iCitra, as has stated in a conference. The withdrawals were aimed to reduce the impact of COVID-19 on the citizen and economy, as it is believed that it will help in catalyzing the economic activity. Furthermore, the endorsement will support the workers to pay off debts, spend on consumption, and more to elude the revenue spent from the government. There are many challenges that are evident when carrying out these initiatives. First, preserving the balance of crude oil volatile price. Petroleum revenue is one of Malaysia's main sources of revenue, accounting for 24.9% of total revenue in 2020. Despite that, the price of crude oil is notoriously volatile. While cutting down the production of crude oil to reduce supply has managed to stabilize back the price of crude oil in 2020, other factors had caused petroleum revenue to keep on falling and are projected to continue being so. For example, Brent crude reached a peak of $86.29 per barrel in early October 2018, but soon declined to $52.73 per barrel by the end of the year. Rising fuel costs impact government spending on fuel subsidies, putting the economy at risk. The high level of uncertainty about future global oil prices, which are driven more by foreign market conditions than by local considerations, puts the domestic economy in jeopardy. The government must ensure the demand for the industry is parallel with the output produced and imported. This can only be achieved if the economy is back to its original state before the pandemic happens. To achieve it, all economic sectors have to be on full blast by increasing consumption and contributing back to the circular flow of the economy. Therefore, sufficient fuel subsidies are important to aid the consumers of the industry in Malaysia. Next, looks low confidence on COVID-19 vaccines. Malaysia has entered the endemic phase of COVID-19 starting from April 1, 2020, all thanks to the rapid nationwide vaccination program. Despite its success, there are still people that did not want and hesitate to vaccinate themselves. There are rumors that taking vaccination can lead to long-term side effects, which are basically only myths and false information. The Malaysian government have estimated the cost of about 4.64 billion ringgit Malaysia just to buy 87.9 million COVID-19 vaccination doses from other countries such as China and UK. Based on the COVID Now data, about 81.7% of Malaysian citizens have successfully taken the vaccine with at least 2 doses or 1 dose of vaccination. Vaccines work as seen through the steady increase in current economic activity, but these reluctant people will be at risk if they keep on refusing the vaccines without valid reasons. Lastly, the fall in KWSP investment. The challenge for Employee Provident Fund (EPF) is the decrease in the investment of KWSP. The reason why the investment of KWSP decreased is due to the funds. As can be seen, the EPF plays a significant role in the bond and stock markets, either through paying dividends to contributors or by providing liquidity to both markets. EPF withdrawals were due to legitimate reasons. 40% of EPF applicants prefer to spend the money they withdraw on necessities, while the remaining 23% want to pay off debts. As is known, government revenue is being used for the expenditure in a country for the sake of national stability and prosperity. Therefore, the revenue of this government is very important in a country to achieve economic stability. Despite the fall in revenue collection, multiple initiatives have been done to cushion its impact. Challenges are evident in each step, but it's also crucial to help our economy grow. To conclude, revenue is an important source for the government's finance and is vital for the government to sustain its collection, to enable redistributive effects to the whole nation.